Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings. Today we're diving into NETLIST Annual Report, a company that's been battling giants in the memory and storage world. Think of this report as NETLIST's year in review, but instead of vacation photos, we get a peek into their finances, legal battles, and future plans. Let's see if they're building a castle or still stuck in the mud. Buckle up, because with NETLIST, it's rarely a dull ride. The report covers the year ended December 28, 2024, so let's jump in and decode what really happened. First, a quick heads up, like every annual report, this one has a section called forward-looking statements. Basically, anything in here that isn't a fact about the past is just NETLIST's best guess about the future. Don't bet the farm on it because, as they admit, a whole bunch of risks could make those guesses wrong. NETLIST sees itself as a leading innovator in memory and storage. Particularly for artificial intelligence applications, they have a bunch of patents and think new technologies are needed to handle the explosion of data we're seeing. NETLIST has some interesting technology like their distributed buffer architecture. This is a fancy way of saying they figured out how to make memory modules faster and more efficient. They also focus on localized power management, putting power controls directly on the memory modules themselves. All this tech goes into products like their HyperCloud and NVVault lines. NETLIST makes some of their own specialty memory modules, but also resells memory and storage components they buy from other companies. These resales are actually a big part of their business lately. You can find more about NETLIST and its products on their website. Now remember what I said earlier, that's their own marketing, so take it with a grain of salt. Speaking of the market, NETLIST mentions the total market value of their stock held by non-affiliates is about $33.6 million. Also, as of March 21, 2025, they had roughly 2074 million shares of common stock outstanding. That's a lot of shares. Now time for some cold water. One of their big risk factors is that they've historically lost money. To become consistently profitable, they need to either cut costs dramatically or seriously boost their revenue and profit margins. NETLIST has been in legal battles with Samsung. The worry is whether NETLIST will actually be able to collect any of the money they've been awarded in court. These legal fights also cost a lot of money and management time, win or lose. Another big risk is their reliance on reselling other companies' products. If demand for those components drops, NETLIST sales could take a big hit. They depend on SK Hynix for a lot of these products, so any supply problems there could also hurt them. They're also betting on new technologies like CXL. This is risky as it needs customer and market adoption. NETLIST depends on just a few big customers for most of their sales, meaning losing even one of them could seriously damage their business. The industry moves fast, so NETLIST needs to keep developing new products and technologies that customers want. Global economic problems are also a concern. If the economy slows down, their customers might cut back on spending, which would hurt NETLIST sales. They also don't have a significant backlog of orders and find it difficult estimating customer demand. This makes planning production and inventory tough. Also, volatile component prices could damage NETLIST's average selling prices, impacting revenue and margin. Their manufacturing operations, mostly in China, are subject to significant risks, which could cause disruptions impacting NETLIST's ability to meet customer requirements. Defective or quality-related concerns from NETLIST product and services could also lead to a bad reputation and potential lost customers. The risk of cyber attacks is also a major thing to consider in today's world. NETLIST wants to make money from their patents, but there's no guarantee they'll be successful. They are involved in constant litigation. Another risk, something we mention on this channel all the time, is that the price of NETLIST stock is highly volatile and can swing wildly based on news, rumors, and overall market conditions. They need to follow a bunch of environmental and other regulations, and failing to do so could result in fines and other penalties. They've identified a material weakness in their internal controls, meaning there's a risk of errors in their financial reporting. This is something they are trying to address. Alright, let's move on. There is nothing in the report about foreign jurisdictions preventing inspection, so looks like they're in the clear with the authorities for now. Okay, now let's look at the executive compensation. The big cheese, Chen Hong, raked in $1,557,041.14 in 2024 and $2,053,000 2023. A significant portion of that comes from stock awards. Their CFO, Gail Sasaki, made $41,15,858. The table also shows their outstanding equity awards. Chunhong had almost $1 million in unvested stock rewards, while Gao Sasaki had around 200,000. Here's who owns the company. Chunhong, the CEO, owns 2.5% of the company, which is almost all of what the executives and directors own as a group, while Gao Sasaki owns less than 1%. Let's look at the auditors. In 2024, they switched from KMJ Corbin & Company to Macias Genie O'Connell. MGO billed $245,275 for audit, and KMJ got $41,455 for work done before the switch. In 2023, KMJ billed $270,000 for their audit, and KMJ got $41,455 and $240 for their audit. Now we're getting into the heart of the matter, the financial statements. Let's start with the balance sheets. Cash and cash equivalents decreased from $40.4 million to $22.5 million to $22 and $41.8 million. These are not great signs. Here the main story is net sales more than doubled from $69.2 million to $147.1 million. Cost of sales also increased, but the gross profit also went up slightly. Operating expenses also decreased. The intellectual property legal fees is down, but they still have to pay. Net loss, while still bad, improved from $60 milli Aussie in Niners to $53.9 million. Looking at the cash flow statement, NETLIST used $34.6 million in operating activities, but gained $16.4 million from financing activities. One interesting detail, they subleased their warehouse space in Irvine, which will save some cash. Now let's wrap things up. NETLIST is definitely a company fighting an uphill battle. They managed to significantly increase their sales, which is great news, but they're still burning through cash. Their main strength lies in their patents and technology, but they constantly need to defend it while hoping for big paydays from litigation. And quote, where they constantly need to defend it while hoping for big paydays from litigation. And their strength lies in their patents and technology, but they constantly need to defend it while hoping for big paydays from litigation. Said key risk is the financial position, and whether or not, given this report's numbers, it's sustainable, and they need to start converting these court wins and revenues into actual profit. To the company's credit, they are addressing key risk with the debt and equity financing they under key risk is the financial position, and whether or not, given this report's numbers, it's sustainable. And they need to start converting these court wins and revenues into actual profit. Thanks for watching. If you found this analysis helpful, please like, comment and subscribe. Let me know what company you want me to decode next.